A 401k and any other retirement plan from a company can be a very, very good way for you to save for your retirement. But those type of accounts can also be restrictive and also leaving you wanting more bang for your buck when you put money into them. And so we're going to talk to you today in this short retirement education concept video about 3 other options that you might want to consider in addition to saving into that 401k. So stay locked in. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea Graves, Director of Operations at the Retirement Education Center. And thank you for tuning in to our Retirement Concepts videos. These videos were created to help to make the difficult and confusing retirement process simple.
Absolutely, Andrew, because with so many different retirement concepts out there and so many different retirement strategies, and of course with so many different retirement products, it can become very difficult for consumers to digest, which is why we work with a team of expert advisors to help us build a comprehensive roadmap that's going to let our clients know when, where, and how they can reach their retirement goals.
For additional concepts on how to maximize your retirement income, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos. Carson, you've helped me with my 401k and provided me with some options, and you've provided me with some options outside of my 401k. Why do you feel that others should follow this same guideline?
Yeah, to me, Andrea, a 401k obviously is an excellent place for you to start saving your money. One, because if your company is going to offer you a match in that 401k, that's free money and you don't ever want to leave that on the table. But as I mentioned in the beginning of our video today, 401ks can be restrictive. They can leave you with less options that you can provide yourself on the outside of a 401k. And so we are going to talk about these options in today's short educational video. But before we do that, there are always 2 rules to retirement income that we like to give you. And Andrew, what are those 2 rules?
Well, rule number 1 is to never run out of money. And rule number 2 is to never forget rule number 1.
Okay, so let's go ahead and talk about maybe some concepts outside of your 401k that can maybe provide you with more control and flexibility for your retirement income goals.
So Carson, your first option to consider outside of your 401k has to do with taxes. What can you explain to everyone out in this space?
Yeah, of course, I want to make sure that we put this on the screen so people can take a look at this first. But when we're talking about, options that can actually help you in the tax space, we need to start looking at if your company offers it, an HSA, and of course, outside of that 401k, a Roth IRA. These are very 2 viable options when we're talking about minimizing the tax effect on your money, because we know that money in a 401k is pre-tax if it's a traditional 401k, and when it comes out, it's going to be taxable income on the back end. So to give you some more diversification and help you minimize the tax effect in your retirement, you may want to consider an HSA and or a Roth IRA for some other additional retirement savings. So go ahead and take a look at the chart as we put it on the screen here so we can tell you the benefits of actually doing this real quick. So let's go ahead and take a look at the chart here when we're talking about an HSA account. So the first thing, in order for you to even contribute to an HSA, is that you have to be participating in a high deductible plan with your company in order to make contributions. And then when we take a look at those contributions, this is probably one of the most unique factors about an HSA account, because those contributions can actually go into that HSA pre-tax. And then those contributions can grow tax-deferred like it would in your 401k. But most importantly, you have this triple tax effect this triple tax benefit, because the contributions then for any type of qualified healthcare expense can come out tax-free. And as you can see from the chart, you can put as much as $3,650 into it if you're a single person. And if you're a family, you can put up to $7,300 into it for 2022. Obviously, there is also a catch-up clause if you're age 55 and older of $1,000. So there are really, 3 aspects to an HSA account that you have to make note of when it comes to how it's going to be taxed. One, let's take a look at the contribution first. Well, in 2022, if you're a single person, you can put up to $3,650 into an HSA. And if you're a family, you can put up to $7,300 into an HSA for 2022. Plus, you can have a $1,000 catch-up clause if you're age 55 and older. But let's just stay with the contributions for right now. Those contributions can go in pre-tax, so that's one benefit, so it can be deductible. So you put that money in, it can actually be a tax-deductible contribution from your income. Secondly, that money acts just like it would be if it was in an IRA or your 401k, because that money grows tax-deferred as well. So that's two major tax benefits from the HSA account. Now let's move over to the withdrawals. Now what happens when you take money out of an HSA? Here's that triple tax benefit from this account. Because when you take out any withdrawals from an HSA account for any qualified medical expenses, they come out tax-free. And once you reach the age of 65, you can take out those distributions for any reason that you want to, and you can avoid that 20% penalty if you take it out before the age of 65. You still will actually have to pay taxes on the money, so it wouldn't be tax-free because it's not for a qualified medical expense. But once you do reach the age of 65, you can take distributions out of that HSA and avoid that 20% penalty that would be assessed if you took out distributions before that without it being a qualified medical expense. All right, so let's now look at a Roth IRA. What are the benefits for a Roth IRA? First of all, let's talk about how you can qualify or be eligible to contribute to a Roth IRA. In 2022, if your income is more than $144,000 as a single person, you cannot contribute to a Roth IRA. If it's more than $214,000 as a married filing jointly couple, you cannot contribute to a Roth IRA. Yes, you can take your traditional IRAs and convert, but you cannot contribute directly to a Roth IRA. Now here's what, when you're talking about the contributions for a Roth, as you can see on the chart, the contributions are not tax deductible. So these are going to be after-tax dollars, and you can put up to $6,000 maximum into a Roth IRA, or $7,000 if you're 50 and older. But now let's move over to the withdrawals. Now, what happens when you take money out of a Roth IRA? As you can see on the chart, for any type of qualified withdrawals, that basically means that you've held the account for 5 years and you're past the age of 59 and a half. In that case, you can pull out those dollars income tax-free. So it's been able to grow tax-free and you're able to pull out money tax-free. So these two accounts can be a very nice complement to saving outside of that 401k.
Carson, another factor that you mentioned that would benefit people was having more flexibility outside of their 401k.
Yeah, absolutely. I think that a 401k, as I will always say, is a great place to save money, but it can be pretty restrictive as far as how you take money out of it. We know that some companies will allow you to take a loan from your 401k, and you have to pay that money back within 5 years. Or if not, if you're under the age of 59 and a half, you'll not only have to pay taxes on those dollars, you'll have a 10% early withdrawal penalty assessed to you as well. So that can be pretty restrictive there, Andrea. So I do believe that, another option that you can consider is maybe just opening up a taxable brokerage account. Yes, you're going to have capital gains or dividends when you invest inside a taxable brokerage account, but you can put as much money as you like inside of it, and you can take money out of those accounts anytime you wish and please. And so it can give you some flexibility on taking some income or taking a distribution without having the factor of having to go through taking a loan from your 401k and risk actually not paying that money back and being taxed on those dollars and so forth and so forth. And so that's one of the things that you may want to think about doing. Also, to complement that is to maybe, we talked about a Roth IRA, maybe you want to consider a traditional IRA as well if you actually have more income and you cannot contribute to a Roth IRA. In this sense, with a traditional IRA, Andrew, you may have an opportunity, of course, to have another tax deductible contribution that you can actually benefit from by contributing to that traditional IRA. And another major thing that you can look at is that you can actually have more options in a traditional IRA than what your 401k may offer you. So just being able to have that flexibility is very, very important, because you may want to save in different channels. in order to not become so locked into the 401k rules and regulations and only the investments that they're going to offer you with that company, by going outside of that 401k and being able to pick out different type of saving strategies inside of a traditional IRA or a brokerage account that could be a little bit more beneficial for you, and of course provide you a lot more control and flexibility as well.
Carson, your last suggestion on saving outside of your 401k is real estate. What do you have to share on that?
Real estate, of course, Andrew, is considered passive income. We all should want to have passive income of some sort when we actually reach retirement. And so real estate obviously have made people a handsome amount of money over the years, and one of the ways that a lot of people become wealthy in this country. And one of the things to understand about real estate is that it has a twofold effect, right? You have the income from the rental property that you own, and that rental income is paying for itself. It's paying for the property. And not only that, the property itself is liable to actually appreciate at the same time. So you're building up equity in that property long term also. And so you have a passive income that provides you with a property appreciation. The one thing that I make note of is that, one, you want to make sure that you don't just jump into real estate as an investment strategy. You want to always talk to a real estate professional in your area so you can understand what property may be of value to you, and make sure that when you do buy that property that you're buying in the money and not outside of the money. And therefore, when you go to rent that property out, or you are expecting that price appreciation, you're already ahead of the game because you bought that property in its proper perspective. So real estate is an excellent place where people make money and have passive income. But as always, just seek professional advice so you can understand what may be available in your market, and then you can make a wise decision on if that's a passive income strategy outside of your 401k that you may want to consider to give you a complementary income source on the back end of your retirement.
Carson, thank you again for your insight on this topic, and thank you for watching. And if you found this information beneficial, we ask that you like it and share it with others.
So we really hope that this information was beneficial for you today. Please understand that these videos are created for educational purposes only, and that you should always consult with your own financial advisor, your own tax advisor, and your own attorney for your particular situation. Also, if you are looking for a fiduciary financial advisor to help you with these type of financial matters, we highly encourage you to click on the link in the description below and go ahead and schedule a free 1-hour consultation with us today.
For more information about this topic or any other topics that we've shared in our other videos, please feel free to reach out to our office or leave any comments or questions in the section below. After this video, please check out our other videos that we've created that will give you tips on how to maximize your retirement. And if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.